Fundamental analysis is one of the most important and powerful tools we can use to invest wisely in the stock market. In this video, I will teach you how to do a proper fundamental analysis and how you can use it in your favor. My name is Nathan and you are watching the Finance Hydra channel. Okay guys, as I always like to tell my students, while the technical analysis will tell you when you should invest in something, the fundamental analysis will tell you why you should invest in something. Also, keep in mind that fundamental analysis is a very complex method, but hopefully I will give you some introduction to this subject in this video. FA is a very powerful tool, but it's not as powerful as you're like. We just started this channel, but we have a lot of interesting content waiting for you here. And I also recommend to you to subscribe so you won't miss any of my future videos. Thank you very much, my friend. Thank you very much for your support. Now, let's begin. In this video, I will focus more on how to analyze a company in order to tell if it is a good company to invest or not. You may analyze much more than that, like macroeconomic data, the global markets, and well, much more. But let's start by analyzing a company first, okay? The fundamental analysis is supposed to help you to understand if a stock is cheap or not. We can't possibly know if a stock's price is good or not if we don't understand the company. Is $10 cheap? Or is it too much? It depends on the stock that you are investing in. So the fundamental analysis will tell you what's the fair value of a stock, and you can buy it accordingly to your own convictions. Some stocks get undervalued by some market distortions, and it is rare, and when you find a good stock undervalued, you will find a bargain. Some stocks are naturally overvalued because you have to pay a premium for the privilege of investing in a stock that has an enormous growth potential. When you analyze a company, it is very important to understand what its sources of revenue are, how much it is making, its margins, the return on equity, future growth, etc. And in this video, we will study company together, and I will give you guys some examples of interesting things to keep in mind when you are doing your own research. In this video, we will not talk about things that are way too complex, alright? I rather prefer to give you a clue to where you should start looking when you analyze a company. And at first, it won't be easy, but with time, you will get used to the language that the companies use to communicate to you. Some companies are easy to understand, some aren't, but if you get the basics, you will be able to apply it to every other company you want. I like to say that fundamental analysis has two sides, the quantitative analysis and the qualitative analysis. The quantitative analysis is all about numbers and ratios. Here is where you analyze the balance sheet, the fundamentals ratios, and much more. The qualitative analysis, on the other hand, is trickier, and it is not about ratios but some other interesting aspects of the company, like who are the people managing the company, the leadership team, are they good? What's the company position within its sector, its strategy and target audience? You must be aware of how to analyze a company's financial statements properly. And guys, the good news is everything you need to know is available at the company's website. All the companies you want to study will offer the information you need. It may seem complex at first, and it is, but the key points are easy to understand. Let's analyze Facebook together so I can give you guys some examples over here, okay? Let's start analyzing the metrics, then we will talk about the ratios, which are also interesting to keep in mind. Okay guys, to analyze a company's financials is very easy, okay? You see here on my screen, Google website, okay? Then you just look for Facebook IR, okay? Facebook Investors Relation. Then you go to this website over here, see? You will find everything you need to know in this website, okay? Everything that it is important you will find here. Let's take a quick look at Facebook third quarter 2020 earnings, okay? Here let's take a look at the slides. Usually these slides are easier to understand, okay? And then we're gonna take a quick look at the earnings release, which has more data, okay? See, the slides over here, they're gonna give you a lot of very useful information. For instance, Facebook daily active users, okay? Here you have how much people use Facebook on a daily basis, and we have a lot of people here, okay? Keep in mind that this number here is in millions, so almost 2 billion people, right? That's a lot, and we can see that most people are from Asia and Pacific region over here, while US and Canada are responsible for only 196 million people, okay? And we have Facebook monthly active users, the MAUs, and again, this number here is quite impressive, right? It's almost 3 billion people around the world that uses Facebook. That's amazing. And again, the Asia and Pacific are most people here that use Facebook, and the rest of the world is in second place, and then Europe, and then United States and Canada with 255 million users on a monthly basis. And here we have some interesting data, because here we find the Facebook average revenue per user. So worldwide, we have almost $8 of average revenue per user. But let's look at US and Canada. US and Canada, we have almost $40. $40 revenue per user in US and Canada, while in Europe is only $12, $11 sometimes, and on Asia and Pacific only $3.67, and the rest of the world is even lower, $2.22. Okay, in the last quarter, of course, because this number here is gonna change a little bit according to the quarter that we are talking about, but usually we can find an average over here, okay? And we can see that there are two main sources of income: advertising and other. We can barely see the other here in this chart, right? But we're gonna talk about this other soon, okay? And although the minority of Facebook's users are from US and Canada, since the revenue here is so high, we can easily deduce that most of Facebook revenue comes from US and Canada, okay? And this data Facebook is going to show you guys later, okay? And here is another very important data. It's Facebook revenue in millions, okay? We have here advertising, all right, responsible for, I don't know, 99% of Facebook's revenue. Advertising was responsible for $21 billion, while the other sources of revenue only $249 million. We have a lot of revenue here on advertising, so we can deduce that Facebook is an advertising company more than anything else, but it also offers other services, okay? And they say to us in their website that other revenue consists of revenue from the delivery of consumer hardware devices and net fees we receive from developers using our payments infrastructure, as well as revenue from various other sources. So this is what is Facebook telling us, okay? It has not a huge impact on Facebook's revenue, but it is interesting to keep in mind because Facebook has other business, all right? And we can see here what are Facebook's other business. If we go back to Facebook's investor relations page, we see here, down here, learn more about Facebook, about WhatsApp, about Messenger, Instagram, and Oculus. Facebook develops Oculus, which is a very interesting product that they are developing here. What is Oculus? Well, as they like to say, Oculus is a division that produces virtual reality headsets, including the Oculus Rift and Oculus Quest lines. So if you believe that virtual reality is a good technology to invest at right now, then Facebook is a good company for you to invest, because, well, probably they're gonna be the leader in its industry in the future, okay? And honestly, speaking for myself, I really believe that virtual reality is the future. I really believe that we are gonna use a lot more of these headsets in the future, not only for gaming purposes, but for business purposes and many other stuff, okay? The possibilities are endless. Here we will find what we talked about, okay? Revenue by Facebook user geography. See, US and Canada are responsible for most of Facebook's revenue, okay? $10 billion in revenue, which is twice of Europe and much more than Asia and Pacific and in the rest of the world. So we can tell that Facebook will benefit from an economic growth of the rest of the world as well, right? Because if Asia and Pacific and the rest of the world are going to perform better as countries, their economy are going to improve, then Facebook is going to improve as well, because it means they're going to sell more advertising to people around the world. So this is very interesting to keep in mind as well. And here we have only the advertising revenue by Facebook, and here we have other revenue by Facebook, user geography as well. It's very interesting to study that kind of data. And here we have expenses as a percentage of revenue, and we can tell that most of the Facebook's expenses, they are from research and development. Remember, this company here is a growth stock and they have a very aggressive growth strategy, so they're gonna invest a lot in research and development, and then costs of revenue, marketing and sales, and other general and administrative, which is a quite low number, at least right now, right? Look at this number here in the past. It was a very high number, right? So this is interesting because they know how they can deduce this expense and invest more in research and development, marketing and sales, and what else, you know? So it tells me how efficient Facebook is on managing its expenses, right? Okay, so here is another report, another of Facebook's report, and here we are gonna have some interesting data because it compares 2020 with 2019. Here we have the revenue, and we have the advertising revenue and the other revenue, and we can see that advertising revenue increased this year. So this pandemic didn't affect that much Facebook's advertising revenue, right? It did affect other sources of revenue, but I don't know how much this is applicable to this pandemic, okay? Because it's a very small number, but in the end, we have a year-over-year percentage change of 22% in advertising. So that's incredible, but the total costs and expenses increased a little bit. Let's keep that in mind as well. We have a raise of 28%. The operating margin decreased this year, okay? We have a better profitability on Facebook, but the costs and expenses increased as well. So the operating margin is lower, is naturally lower, but the net income here is higher, okay? It's higher than last year. So that's a very interesting number. And the most important number here is diluted earnings per share, okay, which increased 28% as well. So that's good, okay? It tells me that Facebook did manage very well with this pandemic, okay? They managed to increase the diluted earnings per share to its shareholders, and that's amazing, right? It's $2.71 for its shareholders. And another interesting thing to keep in mind is Facebook doesn't pay dividends, all right? Facebook doesn't pay dividends because it's still a growth stock, all right? And as most of the growth stocks, they rather prefer to invest their earnings in the company, okay? They prefer to keep the earnings inside of their own business because they are more capable in generating value to their shareholders if they reinvest their earnings, okay? It has more value because if you pay dividends, it means that you have no other purposes, you have no other plans, no other growth potential to the company, so you rather prefer to give it to its shareholder, okay? This is one of the reasons why Berkshire Hathaway does not pay dividends as well. Warren Buffett said himself that I rather prefer to keep the profits within Berkshire Hathaway because I can generate more value to my shareholders if I reinvest my earnings in my own business. And I think this is it, right? We are done here. There are some interesting websites that can help you to understand better the company's fundamentals. Some are free, like investing.com. Some have premium information like Seeking Alpha and Simply Wall, for instance. These websites will help you to understand some ratios, which are very interesting to keep in mind, especially if you want to compare Facebook with other companies or with the industry. Let's use Simply Wall data, for instance, over here, okay? There are some very interesting ratios like the price to earnings ratio, which will measure the current share price price relative to the company's earnings per share. It seems complex, but it isn't. Facebook has a price-to-earnings ratio of 30.8. Think like this: if you invest in Facebook today and its earnings continue the same, you will have your money back in 30 years. Okay? It seems a lot, but keep in mind that Facebook is a growth stock and its earnings are supposed to grow in the future. A high price-to-earnings ratio makes sense for companies that are still growing, while a low price-to-earnings ratio indicates that the company is a value company. We talk a little about some growth and value stocks in these videos. Check them here. Other good ratio is the price to book, which compare a company's market value to its book value, which is the total assets minus the liabilities. Facebook has a price to book ratio of 6.6, which is high, but again, keep in mind we are talking about Facebook. Also, keep in mind the return on equity ratio, which measures how efficient a company is at creating value to its shareholders. Return on equity is expressed as a percentage and can be calculated for any company if net income and equity are both positive numbers. Net income is calculated before dividends paid to common shareholders and after dividends to preferred shareholders and interest to lenders. We also have the return on assets, which is an indicator of how profitable a company is relative to its total assets. Return on asset gives a manager, investor, or analyst an idea as to how efficient a company's management is at using its assets to generate earnings. Return on assets is displayed as a percentage as well. Now let's talk about financial health. If you analyze Facebook's financial health, you will find an amazing company. The company has no debts, which is incredible, but debts are different than liabilities, right? And Facebook can afford its liabilities easily. Its short-term assets exceed the company's liabilities in the short and long term by a mile. The dividends are also interesting to keep in mind. Facebook pays no dividends, and if you want to know more about some very good dividend stocks, check this video right here. But you need to understand the company's dividend policy in order to understand how much they can or are going to pay you in the future. If it makes sense for the company to pay dividends and what is its strategy with it. Also, it is very important to know the management team. Personally, I love when a company's CEO or founder is at the same time the company's largest shareholder or one of its largest shareholders. It gives me more confidence to invest in it, and this is why I respect a lot CEOs like Zuckerberg, Bezos, Musk, or dear Jobs. This is a more qualitative side of the analysis, but it is very important and very good to keep updated about it. Simply will offer you some very important data about insiders' transactions, and although they are not paying me to talk about them here, I really recommend this service. And if you made it this far, you must have liked this video, right? So please remember to click in the like button and subscribe to this channel for more content, okay my friend? Thank you very much for your support and thank you very much for watching this video. Bye!